Hello everyone, and welcome to the tutorial for the FIG Fixed Assets Register. When you receive the folder, there will be 3 files within the folder. The one file will be an example of a completed fixed assets register for you to refer to when completing your own fixed assets register. Another Excel file will be the fixed assets register that you will then use for your own business as a live file. And the third file will be, as the name says it is, a template to keep to copy for new income tax years. I suggest that when you first receive the fixed assets files, that you rename this file with an extension for the financial year that you're going to be using the fixed assets register for the first time. So let's enter, for example, 2012. Then, when you want to create another fixed assets register, if your live fixed assets register gets too full, or if you prefer to start a new fixed assets register at the end of each financial year, you will then use the template copy to keep. To copy, right-click on the file name, left-click on copy, right-click in the white part of the folder, and left-click on paste. And then you can rename that file to, for example, 2013. So that you have a record of all your fixed assets registers, and never do data entry in the template so that you can keep it to copy when you need a new live fixed assets register. I'm going to open the first live fixed assets register that we have in this folder now. Like with all FIG products, you will need to left click to enable content and perhaps also enable editing and any other enabling functions that your PC may ask you to do. You will receive the file with the date March 2012, which you can then edit to select whichever date you require to be using for the first time and whichever year. And you will enter the name of your business in this cell. The fixed assets register has 5 categories of assets, being motor vehicles, the first category on the list, IT equipment, the second, furniture, the third, equipment, the fourth, and office equipment, the fifth. If you are not sure what the difference is between, for example, office equipment and equipment, I highly recommend that you purchase the Small Business Accounting System, which has worksheets within it explaining and describing every single account and type of asset and liability, operating expense and income in layman's language for you. But for now, let's cover how to use the fixed assets register. The depreciation percentage column will already be populated when you receive the file, but if your depreciation percentages for any reason are different, you can edit these percentages, and these columns will all be updated with that depreciation percentage. The division column is there for if you do have different divisions within your business. For example, you may want to allocate one motor vehicle to the sales division and another motor vehicle to the admin division. Whatever the case may be, if you don't have divisions, you needn't complete that column. The description will then be the description of the asset. For example, you'll enter the brand of the motor vehicle, the year, the model, and the capacity. The serial number for motor vehicle, you could enter the registration number of the vehicle. Depreciation percentage, we've already explained. The months to depreciate will depend on whether you purchased the asset in the current year. So for example, if you purchased it in July and your year end runs to February, you will then depreciate from August, September, October, November, December, January, February. You would then depreciate for 7 months if you bought it in the current year. If you've purchased the asset in the previous year, you would enter 12 months to depreciate. And if you purchased the asset 5 years ago, there would either be no months left to depreciate or perhaps 5 months left to depreciate. Keep your eye on the book value of the asset, which will be in this column. And if that book value goes into negative, then you know that in that year you've entered too many months to depreciate. So the months to depreciate depends on when you purchased the asset and how many years you've already depreciated it for. The date purchased is exactly what it says. The source is used for the finance method, so it would either be cash or hire purchase or lease or loan, whatever the case may be. The reference number, you could use the supplier's invoice reference number or the lease agreement's number. The cost price at the prior year end, this is for if you've purchased the asset in the year before the current year that you're now busy doing, you would enter the cost price of that asset here. For example, 200,000, which will then automatically update the total cost at the end of the current year, the depreciation for the current year, the accumulated depreciation for the current year, because we haven't entered anything in this cell for the prior year, and then the book value. If you did purchase the asset before the current year that you're preparing your fixed assets register for, there will be accumulated depreciation for the prior year end, and you will need to enter that manually when you first begin using the product. If you purchase the asset in the current year, financial year that you're busy preparing the fixed assets register for, you will then enter the cost price of that asset in the additions column and not in the prior year column. This separation of costs is required to be shown on your annual financial statements, and so you need to keep that separate. Of course, when you do your next year's fixed assets register, you will move that amount into the prior year end value because it won't be an addition in the next financial year. If you've disposed of an asset, sold it, or traded it in, or an insurance claim against the total asset, you will then enter yes, and it will automatically calculate the reversal of the accumulated depreciation to date. You will enter the date that it was disposed of, and you will enter the amount that you sold it for or that the insurance paid out, and then it will automatically calculate a profit or a loss on that asset. A profit will be indicated as a negative and a loss will be indicated as a positive. If you did not dispose of the asset, you will just leave that cell blank. And the same principle of entering the information for each asset, no matter what category, will apply exactly the same as I've now shown you for motor vehicles. Preparing an accurate fixed assets register can help you tremendously with negotiating with your insurance company for your monthly premium, as well as ensuring that your insurance company has all the information for assets so that you never have a problem claiming. As you enter the data, it will update the subtotals of each category of assets, and it will automatically update the grand totals of each category of assets. And the fixed assets register can be easily integrated into the FIG small business accounting system. And that, ladies and gentlemen, is how the FIG fixed assets register works. Thank you for your attention, and I hope to speak to you again very soon.